Today, we're going to uncover the truth of the states of real estate as we head into 2025, both on a national scale and right here in the heart of beautiful Orange County. Let's go ahead and dive right into it. I'm Jarett Richards with Berkshire Hathaway Home Services, California Properties, and in this video, we're breaking down the latest trends that could define your next purchase, investment, or your decision to sell the property or hold on to it. Have national mortgage rates and home prices stabilized enough to be able to signal a rebound in the housing market? First, we'll start with the big picture, giving you a snapshot of what's happening across the US. Then we'll zoom into Orange County, a hotspot that continues to defy expectations. We're diving deep to see how local trends in pricing, inventory, and sales, which could influence your decision both as a buyer or seller, or possibly even a landlord or tenant. There's no question that the last few years have been a roller coaster, but signs are showing that we might just be turning a corner, but not completely, because 2024 definitely has some very interesting data, so we're not completely out of the woods yet. Stability is on the horizon, but honestly, nobody has a crystal ball, and 2025 is shaping up to be a pivotal year. Predictions do show that only 4 million homes will be sold this year. Essentially, that is a comparison to the slowdown last seen in 1995, a year before I was born, despite the US population being 22% smaller back then than it is today. The high interest rates have remained an issue, even though that they are dropping below 7%, and they're essentially at the high 6% right now. We'll go into that in a second. Essentially, they still are stifling off potential buyers. This is definitely playing an effect on the market. And then the other thing that we have currently is known as the homeowner lock-in effect. A staggering 90% of homeowners had mortgage rates below 6% last year, making them reluctant to sell and lock into higher rates now. That is one of the biggest issues and one of the main driving factors why we have so limited inventory. There may be couples or families that have actually outgrown the home, but they're locked in at 1.9, 2%, 3%. Why would you essentially sell that property if you know your mortgage rate is going to be just under 7%? Does that make sense for you? Well, it's case by case, but that's the issue that we're having right now, a homeowner lock-in effect. Let's talk mortgage rates. As we stand, the average 30-year fixed mortgage rate is currently at 6.71%, with the refinance rate slightly higher at 6.76%. Despite a challenging economic climate, rates are expected to gradually decrease through 2025. However, significant drops are unlikely as the Fed definitely has hinted at only 2 rate cuts this year. Nationally, we're expecting home prices to raise anywhere from 1 to 5%. Let's look at home values and, more importantly, inventory. The typical home value across the United States is currently at $357,469, showing a year-over-year increase of 2.5%. Well, what about market inventory? Well, currently across the US, there are 1,157,072 homes for sale, with 297,205 new listings, indicating a very slow market. To give comparison, in 2016, 5.45 million homes were sold across the United States, and currently we only have 1,157,072 homes on the market. That is a significant difference. What about the impact of political changes with Trump coming into office in 2025? Well, uncertainties definitely exist. Expectations of pro-business policies and tax deductions could stimulate economic growth, with a potential effect on the housing market in an upward direction. And plus, there's buyer confidence, which definitely will help. But again, there's so many factors at stake that I'm not necessarily sure how this could play out with the tariffs and everything else that are currently being discussed. Affordability will definitely remain a challenge, but slight improvements in mortgage rates and moderate gains in home prices are trends to watch. The US Fixed Housing Affordability Index is currently at 102.30, down from last month's 104.90, but this is up 89.90 from just a year ago. So essentially, affordability is definitely a main driving factor, but in my personal opinion, the biggest issue right now is mortgage rates. But what about Orange County? Granted, we just went through holiday season and we're starting off the new year, so of course the market is a little bit slow around this time of year, but regardless, Orange County still remains a strong seller's market with lots of activity going on, and it's already starting to pick up even more. Well, when we're looking at single-family residences, the median list price is currently $1,950,000, with inventory around $1,519 and a price per square foot of $809. When we look at condos, the median list price is $849,000 with 947 units available and a price per square foot of $676. When we look at the rent for single-family homes, the median rent was $5,995, and for condos, the median rent was $3,112. Let's break down by the 3 different cities that I mainly specialize in, not only because if you're looking to buy in Montana, Arizona, Utah, out of state, out of country, yes, I have people in all these different places where I could help connect you with someone just like myself who's gonna really tailor services to what you need. But regardless, besides the point, we're gonna break down Newport Beach, Corona del Mar, and Newport Coast to see how these markets are doing to really help you pinpoint if you're looking to sell, buy, or even rent. Let's go ahead and look at key markets within Orange County. Let's start with Newport Beach. The median list price for homes in Newport Beach was $5,922,500 with an average days on market of 159 and a median rent of $11,000. When we look at condos for Newport Beach, the median list price was $2.6 million with a price per square foot of $1,288 with an average of 114 days on the market. The median rent was also $3,800 a month. When we look at Newport Coast, the median list price was $15,500,000, staying on the market for an average 168 days with a median rent of $24,000. When we look at condos in Newport Coast, the median list price was $2,617,756 with a price per square foot of $1,331 with an average days on market of 63 and a median rent of $5,600 a month. When we look at Corona del Mar, the median list price is $7,497,500 with average days on market at 128 and the median rent was $14,998 a month. When we look at condos in Corona del Mar, the median list price was $3,650,000 with a price per square foot of $1,924 and an average days on market of 75 days, and the median rent was $9,000 a month. So as we begin to wrap up today's deep dive, whether you're buying, selling, investing, or leasing, or maybe just keep an eye on the market, understanding these detailed trends are very crucial. We covered a lot today, from national overviews to mortgage rates and everything going on within Orange County. For homeowners, if you're thinking about selling in Orange County, right now is a great time to maximize your investment, especially going into springtime, which is usually the hottest time to be able to sell the property. The current climate is highly favorable, prices are up, and demands remain strong, especially for those in well-located properties. You could expect competitive bids with a significant portion of homes selling above asking price, and we're going into prime season. For buyers looking in Orange County, while competitive, it still offers opportunities, especially for those prepared to act swiftly. The key is to be ready with financing and flexible terms, and the best properties often do move quickly with intense competition. Thank you for watching. Be sure to hit that like button and subscribe. Until next time, go ahead and contact me at 949-405-4455 for all your real estate questions.